In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing and rejecting a quite strong level of monthly demand and support. From here, all this previous rejection to the upside was created. Again, here, the market tested its zone and rejected it to the upside. Again, here, we had the test and rejection. Again, here with the creation of the small green candle. And we can see how last month the market once again tested this zone, started rejecting it to the upside. And in a situation like this, we could expect more bullish price action to be created away from this zone. Now, if we drop down on the weekly time frame, what do we see? Well, from a weekly perspective, price action is quite clear as well. We have a market which is currently testing and rejecting to the upside previous weekly resistance, which is now turned support. In a situation like this, we could expect more bullish price action away from the zone. There is a possibility to see another test of this support before then getting the rejection to the upside, but overall, the structure of the market suggests more bullish continuation. Going down on the daily time frame, what do we see? Now, here on the daily, I did speak about Euro USD a couple of times in the past. I spoke about it after this impulse here. I explained all the reasons for which we could expect first a correction, and then from here, more bullish continuation, which is exactly what the market gave us. And then with the last analysis, I explained all the reasons for which after this impulse and correction, we could expect the creation of a higher high, which is what the market gave us. However, after creating this, and by the way, I will link in the description these previous analyses, so you can go and check them out for more free education. Now, as I was saying, after the market created this higher high, as we wanted to see, immediately it started getting rejected to the downside. What this could mean is that the market might want to go for another test of that weekly support. Now, we don't know if that will be the case, but if it will be the case, that would create an M pattern. And after the creation of an M pattern, we could expect a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. So if here we will have the creation of this M pattern, which is a bullish pattern, at that point that would increase the probabilities that we might see a rejection to the upside for the completion of this M pattern at the neckline, which in that case would be this previous daily support turn resistance. So if this M pattern will be created, how we could be approaching this potential rejection to the upside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of this M pattern at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.